Okay, so let's do some trading. It is December 29th, 2017. We're at Limerick. So I'm going to use very, very small stakes here just to show people that you do not need a big bank to make a reasonable return. So at the end of the day, trading is about making money in the long run, not today, not tomorrow, but making money in the long run. And if you want to learn how to trade like me, then you can click the link in the description. And right, so let's see. So the favourite's been drifting out. He was very, very short priced. Now he's gone out over twos. So that's a very small field. So it's only the first three horses that are really relevant. So at this point, there's no point really starting because only £50,000 matched. So only these three horses that are really in contention. And, you can see the big gaps in the market here. And the fact that this has got such a long traded range means that, it can shoot off in one direction very, very quickly. So at this point, I just wouldn't enter because there's so little money in the market that if you jump in here with a £100 stake or a £200 stake, you can get on the wrong side of it very quickly. So at this point, I would suggest you sit back and wait and let the market mature a bit, and before you make an opinion. So I'll pause the video now for a minute or two and come back. So I'm going to open a position here on the favourite, on the lay side. All right. I'm just gonna. This is a speculative trade, right? There's a nice chunk of money came in for the second favourite, and also on the third favourite, and yeah, it's just I don't know. It's just a very nice price to lay on this one. It's already drifted out a lot, like a lot. Right, it's come all the way from 1.5, 6, all the way up to twos, and yeah. So I've laid it there. I'll watch these other two. If there's a lot of money coming in for these two, then I'll keep it. If not, I'll probably dump it if it comes down to sort of twos here. Because obviously, if it approaches two, then there's a good chance it's going to break through it. So, so I'll leave it there for now and try and scalp out a few. I'll do some directional scalping, hopefully. And also here you can see there's a nice chunk sitting right here. So this position here is quite a nice one to scalp out because this £2 grand, £3 grand will keep the money here for a bit. But for now, I'll just sit and wait and see what happens. So obviously, right now, I want money to come in like that for the second favourite, which it is now. So you can see the favourites drifting out. And I'll trade on the basis that's going to keep drifting. So you can see it's going way out there. And it's probably going to come back down a bit again, so I'll place a few additional trades here. So when it dips back down, I can scalp out a few cheeky more ticks. Whether or not we'll keep drifting, I'm not sure, but I do have some leeway to play with here, so I'll leave the £20 in for now and see how it goes. That's one of the beauties of trading with small amounts of money. You've got, especially if you're brand new, right? Because it gives you leeway to learn. It gives you leeway to play around with, dipping points and just quick. When the market moves like this very quickly, you're not going to panic because even if you're a brand new trader and you've only got like a £200 or £300 bank, you can trade like this and really get to learn how the market moves, which is really valuable. Because if I was trading with £200 or £300 stakes right now, this is quite a delicate situation to be in because the price can just shoot off in one direction really fast. So if you're a brand new trader, I would highly recommend you use small stakes like this, because you do not need a huge chunk of money to make money, right? Because you can see, I've only trading with £10 stakes, and I'm in a £2 profit here, right? Or hopefully, we'll see how it goes. But so it is that thing of, you know, if you use small stakes, then your emotions are focused on the trade, not on how much money you're potentially losing. So you can see now I'm in a very comfortable position right now. You know, I'm just sitting here. I've set the stop loss at 2.2, so I know that the worst case scenario is this comes crashing down and I get nothing. But you can see it keeps running out. With a, you know, I'm gonna scratch this out here, because I know from experience that usually when the price runs out like this in the last minute or so, it'll probably come crashing back down again, because everybody who are on this lay side are now going to cash out. So I'm going to jump in here with a bigger stake just to show you what I mean. When this hits 1 minute, I'm going to try and sneak in here. Yeah, I'm going to jump in here now and stick this one down here. Because like I said, in the last few minutes, a lot of people will cash up the profits, and at this point, the second favourite's hitting freeze, right? It's a resistance point, so this will probably bounce back off, or hopefully anyway. So at this point, I can really go to town on the scalping, because when this one bounces back up again, this will also react to it. So you can see there, just as I mentioned, again, that's not me being a smart arse, that's just me using my experience by trading and learning from previous mistakes, right? Because the market moves in a very fluid way all the time, and what you'll learn is, if you click the link below in the description, right, you'll be taken to a trading course that teaches you this sort of stuff. You learn very quickly the movement of the market, and just how, you know, this looks like it's really chaotic, up, down, but in fact it's actually quite easy to read. So they're about to go off. I'll leave this as it is now. You know, it's a £5 profit from, I was using £10 stakes. I've used one £50 stake, just one, but the rest was just £10. You know, small trades. I was not risking a huge amount. I was just reading the market, and I was able to do that because I was using small stakes. Because at any point when the price moved against me a bit, I wasn't worried, because my potential loss is such a small percentage on my bank that it doesn't matter. And that gives you the leeway to just read the market and move with the market, rather than being bullied by the market based on your emotional attachment to your potential loss. Alright, so yeah, thanks for watching. Click the link below this video to jump to the training that can teach you how to trade, and yeah, I'll see you in the next video.